A dash or a crash? Well, I told my gang members we're going to have a high probability of one more dash to the top. They have no choice. Let me explain why. First of all, look at my chart. This is the S&P. When we bought the S&P back here, this is our color-coded chart. It gives us a buy signal. It turned green. Majority of my gang members have about a 15% gain. But the market also started to roll over. Why? Well, because what drove this entire market wasn't earnings or earnings growth. Are you kidding me? It was the promise of rate cuts, rate cuts, rate cuts. But behind that was increased money supply. Now, not only does money supply an accurate predictor of inflation, but it's a contributor of inflation. So to move the market up, they had no earnings to move it up. So they did money supply. Now, what's that mean? Let me show you. They started to inject into the market. Take a look at Obama. When he got into office 2009, and he got out of office 2017, he increased money supply, or think about it this way, inflation by $5 trillion. Because remember, money supply not only is a predictor of inflation, it's a contributor of inflation. So he contributed to this massive inflation, $5 trillion. Trump gets into office and the market starts pulling back. Look at it, starts pulling back. He didn't want that to happen because we had no earnings to push the market up. So let's do some more money supply. Print money, increase it, inject more money to keep the market rallying. And from 2017 to 2021, he injected $6 trillion because we have no earnings. They pushed the market up. The bubble's getting bigger and bigger. Inflation's getting more and more. And then when he's out of office, the market also starts pulling back again. So see, every pullback, they panicked because there was no earnings. So the only way they can move the market up is by printing money, increase money supply, which increases inflation. And so now we have Biden, he increases it by $3 trillion. So we had $5 trillion, we had $6 trillion, and we had $3 trillion. Are you nuts? $14 trillion to push the stock market up? That's what it was. It's inflation. And a predictor of inflation. So with no earnings, they kept with that narrative. Oh, don't worry. Everything's okay. We're going to have rate cuts, rate cuts, rate cuts. You can't cut rates. There's the proof right there. You can't cut rates because you're increasing inflation by increasing money supply. Then they started with, after the rate cut, they started with, oh, we're going to have a soft landing. You can't have a soft landing. We had one soft landing in 78 years. What are you, nuts? One. Then they started with a strong labor market. We have a strong labor market. A strong labor market? What are you, nuts? We had no strong labor market. Where was the strong labor market? We had 8.7 million people working two jobs. How could that be a strong labor market? What are you, nuts? That's insane. And then we had Biden get caught by creating 400,000 jobs that were fake. He and his advisor, Bernstein, they created 400,000 jobs in the year 2023 that weren't there. The BLS in the White House. So how can we have a strong labor market when they got to create 400,000 fake jobs? How can you have a strong market, labor market, when half of the jobs are government jobs, terrible government jobs? So just take March alone. We had 303,000 jobs in March. What they didn't want to tell you, 152,000 were government jobs. Official government jobs, like if you hired somebody at the post office, was like 71,000. But the healthcare and social jobs that are really government jobs because it's all government funded. So that means half of our jobs are government. You can't grow an economy. So our economic growth was because of government jobs. And you wonder why the market started to roll over. What are you, nuts? And strong economic growth? You're not going to have a strong economic growth. And you're not going to have a strong labor market when your jobs are government jobs. So let me show you. So what's happened is this. When the market started to roll over, okay, right here, started to roll over. Before that, I kept telling everybody, here, take a look at this chart. Blue is the S&P, and the gold line is gold. Now, from August 3rd, 2020 to October 2023, okay, or February 2020, gold was not moving anywhere. Gold couldn't get above $190. Now, I'm talking about GLD. That's the symbol. And look at the stock market. The S&P rallied, and then it pulled back. The rest of it rallied, and it pulled back. We had a low, a lower high, and it was ready to collapse. But they came in, and again, more money supply. They put in more money supply, $3 trillion, to make sure the market didn't go down. It would go up. And this whole rally, see, as it started in October, the big rally we're in now right there, heading up to March, going up 29%, something happened. Gold, GLD, all of a sudden started to rally in February, identifying, look, the rally that's going up is fake. The rally that's going up is not sustainable. See, when gold goes up, gold tells you that. Gold tells you there's tremendous inflation. Gold tells you when it goes up, hey, you got a problem. And by the way, one big problem you got, your lenders, China, Japan, they want more interest on the money they're loaning you because you got so much inflation. So gold identifies inflation, while at the same time, your money supply identifies inflation. So you got a real problem. That's why the market started to roll over. But it was interesting. Everybody was saying, oh, no, don't pay attention to gold. Don't pay attention to gold. I kept saying, rates aren't going to go down. And what's going to happen is gold is going to go up. And I got my gang members in gold before almost anybody else did. And we bought gold and we did very, very well with it. Now what's happening is this in the market. So here's what's going to happen. So we know right now, if you take a look at the spiders, so we know the spiders are rolling over, but we also know this. Look at the volume. See the volume, the sellers here? We got far more sellers than we got buyers. So this rally is being created by another falsehood. Hey, we got 40% of the S&P 500 stocks reporting this week, and they're all going to be great, and earnings are going to be terrific. Really? We'll see how that works out. But right now, as long as you got more sellers in red than buyers, these rallies won't hold. So now let's go to our gold. Our GLD and GDX, they pulled back a bit. And I told my gang members, let's take profits, put our stops in, and let's stay with some shares. Don't get out totally, because I still believe gold is going to go through the roof. But right now, everybody's dumping their gold to buy stocks again because they think the lie is true. Going to have great earnings. So we're doing fine with our gold. We're not going to get out. We're just going to cut back. Now, what is going to happen with big tech? Big tech is going to tank. Your NVIDIAs, your Microsoft, all big tech. It's over because interest rates are going up. They're not going to come down. And high yields, which is interest, it kills tech stocks. So you're going to see a little bit of a rally in these tech stocks. You're not going to see them make new highs. And all the people that jump in every time they go up, buying a dip, are going to get killed. But you'll get a rally for a while. And then they're going to come back, make new lows. So understand, when you look at a symbol and you put up a symbol, let's say XLK, this will help you right here. So XLK, look at this. That's for your text. Look at this. Our color-coded chart turned red. Yeah, it's rallying today on this nonsense, on this BS, okay? But these tech stocks are going to drop like a flying crowbar. Those are the ones that my members are going to be shorting after they rally. And when they can't get to the top, this is what happens. When they can't get to the top, the test is at the top, there's going to be panic. They come down, take out this low here, and then they fail. And that's with the S&P, that's with the Qs, that's with every stock. And that's what's eventually going to happen after this BS passes. So your gold is going to still be the winner. Your tech stocks are going to tank after this rally. Your bank stocks are doing everything they can to push the bank stocks up, to push the S&P up. Remember, the bank stocks push up the S&P. To keep the S&P away from that 5% where all the stops would have triggered, Plunger Team went in and bought banks, and banks bought banks to try to push the bank stocks up, to push the S&P up, to keep away from that 5% trigger. But eventually these banks are going to turn around and they too will rally, fail at the top, come back down and make the new low, then they will drop. They're all going to do the same thing. Rally on BS, can't make the new high, panic sets in, sell off, take out the low, and that's when they're going to go down. And the tech stocks are going to be the worst. So you got your banks are going to go, again, they're going to try to push them up for a while. Those are going to be the big heroes, push those up for a while. But again, at the end of the day, the banks and the big tech stocks, they're all going to come down. They're all going to come down, okay? And gold will be the winner. Oil, for a while now, our oil stocks, I told everybody in our oil stocks, we're going to be taking the oil stocks and they're going to be consolidating for a while. They will consolidate because we don't know what's going to happen in the sandbox over there. So you have good rumors, bad rumors, until we get some real bad rumor, okay? So your oil stocks are going to go sideways. After your tech stocks rally, after your bank stocks rally, they're going to fail to make new highs, come back and tank, and it'll be the tech tech stocks that are going to lead the market down. But for more information on the market and understand really what it's doing so you don't listen to this BS, this crap, rate cuts, go to my gang, BillsGang.com, free for 10 days. We'll work with you. You got 10 days to work with us. And our charts, you see these charts? When they turn from red to green, that's a solid buy signal. Same when they go from green to red, it's a solid sell signal. You get those for 10 days. You'll love it. Okay, we'll see you on the charts. Remember, please hit subscribe, like, and share.